Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list you're ever going to need as a dividend investor. Today, I'm going to show you guys a small list of dividend stocks that doesn't suck. And if you guys determine that any of these stocks are right for you and you're here on time, you'll be able to buy these stocks and get the next dividend really soon, as the stocks that I'm going to mention in today's video all have ex-dividend dates for next week. Now, I know all that sounds way too good to be true, but I have something else to tell you. All of this information is going to be provided to you guys at the low cost of free $99, and all I'm asking for in return is to make sure you guys are subscribed to the channel, leave a like on the video, and use the comment section down below to let me know what you guys thought of this week's list. And now that we just made sure that we're going to be best friends for years to come, let's go ahead and kick things off with number 5 on this week's list, Morgan Stanley, stock ticker MS. MS is a quarterly payer in the financial sector, paying $3.70 per share per year with a forward dividend yield of 3.62%. MS has been paying and growing this dividend over the past 11 years. They have a 3-year dividend growth rate of 34.42%, a 5-year dividend growth rate of 23.16%, and a payout ratio of 48.35%. Now, at the time of recording, Morgan Stanley was trading 6.43% off of their 52-week high. They have an ex-dividend date of July 31st with a payout date of August 15th. And looking here at this chart, you're going to be able to see the growth of $10,000 investment over the past 10 years while reinvesting dividends and without reinvesting your dividends. Up at the top, we have $10,000 into MS that would have turned into $41,703.83. The S&P would have turned into $33,497.75. That's a difference of $8,206.08. Down here at the bottom, while not reinvesting those dividends, MS would have still turned into $37,169.89, whereas the S&P brought back $30,754.79. That's a difference of $6,415.10, and the difference between reinvesting and not reinvesting those dividends was $4,533.94. Next up, coming in at number 4 is Matson, stock ticker MATX. MATX is a quarterly payer in the industrial sector, paying $1.36 per share per year with a forward dividend yield of 1.07%. MATX has been paying and growing their dividend over the past 11 years. They have a 3-year dividend growth rate of 11.64%, a 5-year dividend growth rate of 8.79%, and a payout ratio of just 14.91%. At the time of recording, Matson was trading 4.74% off of their 52-week high. They have an ex-dividend date of August 1st with a payout date of September 5th. And looking at the same chart, we have that $10,000 investment while reinvesting the dividends. Matson would have turned into $55,996.95, outperforming the S&P 500 by $22,499.20. Down at the bottom, without reinvesting those dividends, Matson would have turned into $49,399.27, outperforming the S&P by $18,644.48. And the difference between reinvesting and not reinvesting those dividends was $6,597.68. Here in Oklahoma, everybody loves their gas stations, and maybe as dividend investors, we need to like this one too. Coming in at number 3 is Casey's General Store, stock ticker CASY. CASY is a quarterly payer in the consumer staples sector, paying $2 per share per year with a forward dividend yield of just 0.53%. CASY has been paying and growing this dividend over the past 25 years. They have a 3-year dividend growth rate of 9.23%, a 5-year dividend growth rate of 8.2%, and a payout ratio of just 12.64%. Now, at the time of recording, Casey's General Store was trading 3.28% off of their 52-week high. They have an ex-dividend date of August 1st with a payout date of August 15th, and that $10,000 investment into Casey's while reinvesting the dividends would have turned into $60,336.30, outperforming the S&P 500 by $26,838.55. Down at the bottom, without reinvesting those dividends, Casey's would have still brought back $57,475.43, outperforming by $26,720.64, and the difference between reinvesting and not reinvesting those dividends was $2,860.87. And that brings us to about the halfway point of this week's video. If you guys haven't already, please remember to leave a like on the video, as it helps me continue to grow my channel, and don't forget to talk to me down in the comments below, as I really want to know what you guys think of this week's list. But now, let's get to number 2. Coming in at number 2 as the second most important stock you guys need to know about coming into this week is West Pharmaceutical Services, stock ticker WST. WST is a quarterly payer in the healthcare sector, paying 80 cents per share per year with a forward dividend yield of just 0.25%. Now, WST has been paying and growing their dividend over the past 31 years. They have a 3-year dividend growth rate of 5.65%, a 5-year dividend growth rate of 6.02%, and a payout ratio of just 8.89%. Now, at the time of recording, West Pharmaceutical Services was actually trading 23.53% off of their 52-week high. They have an ex-dividend date on July 31st with a payout date of August 7th and a $10,000 investment while reinvesting the dividends. Despite being down 23+%, it still would have turned into $82,875.75, outperforming the S&P 500 by more than double at $49,378. Down at the bottom, without reinvesting your dividends, that still would have brought back $80,557.70, still outperforming by $49,802.91, and the difference between reinvesting and not reinvesting those dividends was $2,318.05. Coming in at number 1 is a stock that's literally helping build America. Say hello to D.R. Horton, stock ticker DHI. DHI is a quarterly payer in the consumer discretionary sector, paying $1.20 per share per year with a forward dividend yield of 0.69%. Nice. D.R. Horton's been paying and growing their dividend over the past 11 years. They have a 3-year dividend growth rate of 14.06%, a 5-year dividend growth rate of 14.87%, and a payout ratio of just 7.81%. Now, at the time of recording, D.R. Horton was trading 2.05% off of their 52-week high. They have an ex-dividend date of August 1st with a payout date of August 8th and a $10,000 investment into D.R. Horton 10 years ago while reinvesting those dividends would have brought back $81,213.97, outperforming the S&P 500 by $47,716.22, while a $10K investment without reinvesting your dividends still would have brought back $75,415.28, which outperformed the S&P by $44,660.49. That results in a difference between reinvesting and not reinvesting those dividends of $5,798.69. Also nice. With that being said, if you made it here to the end of the video and you're watching this video on or after July 29th of 2024, you need to make sure you have that subscribe button clicked along with the bell rung, as some of the ex-dividend dates I mentioned have already passed, which means you just missed the next dividend. Now, that's not the end of the world, but these companies all do pay quarterly, which means you need to wait 3 long months before you get your first dividend from these companies, and that's not the point. So make sure you're subscribed so you can come back every Friday at 8 a.m. Central Standard Time and check out this week's list. Don't forget to use that comment section down below to let me know if you guys own any of these stocks and how they're doing for you. And if you don't own any of them, did any of them pique your interest? Let me know down below. If you like the style of this video and you want more stock lists that don't suck, check out last week's video right here. But until next time, see ya.